back to another Trading Fibs video. Today's August 14th, 2025. So the time has come that we need to update this rally. Now, people that have subscribed and donated to the website are getting one-on-ones on earlier time frames for potential pullbacks and targets on this rally. But I said a few months ago on the rally back in April that this was our starting point, that we need to measure our existing our continuation rallies. I just didn't know at the time how big it was going to be, but I did say there was going to be an extension in the legs. And like I said, this oval here was our beginning move to give us these higher targets. The problem was when each leg was extending. So let me just say, we're going to deal with 3 degrees of trend right now. So I've got a primary degree in blue. The next degree down is going to be a major degree in yellow. The degree below that will be in white for a minor degree. And as we continued up for this C leg in our primary, we actually subdivided into a minuet degree. Okay, I just didn't label them. I can label them here in a little bit. So each leg we got an extension. Okay, and I'm not really going to go into the measurements, but on this final leg, I believe it's our final leg, and we could have 2 potential targets, 65.40 or 66.52. Now, the other way to look at this is that if we were going to get another leg higher, we would have seen bigger corrections instead of these small pullbacks here and here. All right, we would have seen this B maybe extended out here to where all of this would have been some kind of expanding flat, come back here for B, and then we go higher for this major degree C. But I think is what I still think we're going to go higher. I think that's going to be the case. It's just going to be different the way I label it. So if that's the case, I'll probably have this as the primary B perhaps, and then we'll move the primary C higher. So I think, let me just remove this. So this is what I'm anticipating anyways. We're going to hit these targets, and we're going to probably have some kind of pullback to this bar here that I have, this gray shaded area, which is the top of our original A. Okay. So if that's the case, like I said, I'll probably move this. I'll move this primary B out to the side here, and we'll count these extended waves as minuet, minor, major waves for. We'll just say this extended leg was a major. It'll be a major A. Okay, but I know it gets confusing, but just know that this wave is potentially done. It doesn't really matter how you count it. Okay, we follow the fibs for our targets. They hit exact, and if it falls short or moves higher above the fibs, then we plan accordingly. If it's higher, then we got higher targets. If it's lower, then it's a bearish move, and we got a correction coming. The corrections are measured based on Fibonacci percent derivatives also. So these little pullbacks tell me that it's part of something else. It was not part of this original leg. Okay. Now this target that I have up here for 66.52 is from this first A move up, and if that completes, then we would bring our targets up for our pullback, which is from here, and it has to at least hit the pullback to the 61.99 to get counted as a pullback from this initial wave. All right, just trying to give a little bit of education here on how I count these waves. I get more in depth on one-on-one situations. Some people send me emails and we'll schedule times and we can do some Zoom meeting and get some real-time trades in. But again, I'm not a professional advisor, financial advisor. This is all amateur, based on a new wave theory count that I have taken from Elliott wave. Okay, so you still have to understand Elliott wave to figure out, what I'm coming from as far as how Fibonacci sequence is implied in all these moves. But if you can follow the counts, like I said, I have 3 degrees of trend shown. So we have an A and a B and a C. It's the C leg that was subdivided and extended up that caused this nice rally up. So it's about to come to an end, and we'll try to track it on the way down. And like I said, this is still... It's possible that this is one of a smaller degree A for a move higher once the pullback comes. But I've already showed videos on why I think that. But on the other hand, let me switch to the SPY real quick, and we're going to look at the weekly time frame. Well, first of all, let's look at some time sequencings to see potential turn dates. Okay, now each of these arrows represented a specific time of date for a potential trend change. Now, if you look at the arrow, I pretty much posted it right on the specific day. And this is all based off the April 7th low right here. Okay, so every calculation is added from April 7th. So here is 35 days out, 89 days out, 144 days out, and 233. And if you've seen the videos prior about Fibonacci sequence, you understand where I got these numbers. So let's just look here. 35 days out, you had a gap up on that day. On the 89th day, we had consolidation. It wasn't that big of a move up or down, but it was a trend change for it looks like a B wave. Okay, so we had an A up. This day signified the change in trend for a B wave. 144 days out, we have not hit yet, but it's showing around August 29th. So I have 2 dates that haven't hit yet: August 29th and 11/26, which is 233 days out from April 7th. I'm anticipating this might be the completion of a bigger trend change, or the start of a trend change. So just judging by these time spirals, if 829 is our first, maybe we continue, maybe we have a little small pullback here and then another push higher. So this would be like some kind of expanding flat, because if you notice, this 161.8 is exactly where we ended up today. I'll zoom in right on the candlestick here for us. So, I mean, that's pretty close. It was actually the previous day, yesterday, we hit a high of, and this is the SPY, S&P 500 ETF. The high was 646.19. My fib here is 646.79 or point 0.8. So that's close enough for an exact measurement, okay? So now maybe we pull back, correct this. The problem is if it breaks this, then we're moving higher to a higher fib, which is up here at the 200%, which is 747.75. I'm not saying it can or can't do that. I'm just saying that look at these time spirals. They have showed something, and they've been looking quite significant. So focus the spiral plus the time date, okay? Notice again, I'll repeat it. 35 days out, the gap up. Time spiral hit, maybe a day or two off, and we continued our rally. Our time series here at 89 days showed consolidation. Our time spiral showed that the end of the entire leg was almost complete, and this sequence should continue further on. So going by that, August 29th is pretty close. So maybe we have once it hits August 29th, we have the sideways consolidation for B. C goes up to closer to November, maybe get another extension leg, and that's when we drop. Or this 161.8 fib is an area of significance. We start our correction now, and then in November of 26, maybe we get our bounce and continue higher. So the reason I'm starting this video today is because the SPY did land right on the 161.8, and we've had 2 days where we haven't crossed it. So I know we're coming into a weekend, so I would say if we were gonna blow past this 161.8, then on Monday we would have a candlestick that would probably gap up again. And let's just say we take a measurement. Let's go down to the 4-hour time frame here. Let's see if we can get 3 waves out of this section here. Obviously we got 3 waves here, A, B, a C direct hit here. So we're going to take this off, continue our move here. So that's 1 degree. This is pretty close. This is 2 degrees. So we have 2 degrees of trend. And we are at a area of a 160, a fib that goes back to October of last year, I believe is when it was. Let me zoom out here real quick. I'm going to put it back on the weekly. Oh, I took it from 22 when we, yeah, of course. So let's see if we can. All right, so yeah, this leg right here, which is from March 2020 to January of 2022. That whole leg gives us our future targets. So anything that made a higher high past January of 2022 is when we started our target rallies for the high side. So our first one was, again, this is the SPY. So our first one was at 545. The next one was 584, and now we're sitting at our next target at 640. I can't really read through all that. 646, 8.8. Okay. So that's where we're at. We need to keep an eye on it and see if we break through. If I zoom into the 123 fib, you can see we had a lot of reaction, used it as support, broke through, tried to come back and retest it. Even back in April, we used that fib as some support and resistance. So it wasn't until the 138.2. I mean, you can see how it tried to retest it. So they're both significant. The fact that we had that kind of reaction to both those fibs, which are bearish fibs, and then a breakthrough, I don't think it's going to go on to the 200 at this juncture. I think November time frame for our time spirals, November 26th is going to be when we start to try to head for that 200 fib. If we continue the rally up, I'm still on the fence based off of our 22 correction. I feel like we're going to try to retest the January 22 high back here at 478. I know we did that in April. I get that. But there's something that tells me that I feel like we're in a certain type of wave that's going to make all these three moves that I'm counting more justifiable. And we'll just, time will tell. So first thing is first is we see how we get past this 161.8 if we can before August 29th. So if it looks like we're going to go to this 200%, we should know in the next couple of weeks. So let's go back to the micro E-mini chart. Let's drop it to the 4-hour. See if there's anything I missed. I guess that's all I can think of right now. So that's kind of the reason I'm putting this out today, is because we did hit that 161.8 on the SPY. And that was... Okay, there is another fib I want to put out. Let me get rid of these targets up here. I'll keep the written targets up, but I want to show... I did not mean to do that. Let's see, how can I put all this in here? Let's go to the daily. And I did say back here in August of last year that we could have started our correction. And because we're in such a big cycle degree, that these moves are going to be huge. So, and back in August of 2024, I was catching a lot of expanded flat moves. Okay, so even when you made higher highs, you're going to make lower lows off your initial move. All right, so let's, for example, let me highlight these with some rectangles. So, for example, all those expanding flats I was catching, that's your original move. Here's your higher high. And here's your lower low. All part of the same correction. So if that's all part of the same correction, then this leg can be measured off the initial wave, of the initial A wave. I think the bottom's down there. That oval is in my way, so I can get it closer. But notice the 200% here. It's at 66.45, which is overlaps with this target here. So even if we go higher, we're still part of a bigger correction based off of the August 24 move. Right? So bear with me. Let me highlight this, and then I will end the video. So if it was expanding flat on top of expanding flat, you have an A, B, and C. So this was all one move. This will be one move, which makes a higher high, right? So if we make a lower low based on expanding flex, then this should be, it should at least break this April low, which will also break the January 2022 low, right? And if we do that, it's going to send out a lot of alarms, I think, and then I think it's going to cause a sell-off once we break those two lows. And then because we're in such a big degree of cycle, that this is an A leg of a bigger degree, this entire move. That'll be an A. And it's probably going to go lower than that. But I have shown a video of what I anticipate the market will look like as far as a chart perspective back in October last year, if not in August. So maybe even earlier than that. But you'd have to hunt for that video. I'll post it when it's all said and done, see if I was right. But I don't know how much further it will go up. All I know is when it turns, it's going to be big. So trade cautiously, and I hope this helps, and until next time.